Hey guys, welcome back. So in this lecture, we're going to talk about geometric structure indicator overview. Okay, this will be your map to market navigation, and we're gonna move from chaos to clarity automatically. Okay, so I'll just disable that, and you can see the chart here. Okay, so the real question in traders' mind is how do you apply this? We've talked about waves, we talked about swing points, but how do you actually apply this in real time trading, right? So one of the problem that many traders face is the manual drawing problem. Most traders try to draw all these levels manually. Okay. So for instance, check this out. Okay. Um, Here, some like in trading, this is like a social media of traders. So you can see all these levels people have been drawing, and every trader have their own opinion into what should happen and um, like how to trade the market right way or wrong way. It doesn't really matter. The only thing that matters is like, does your strategy or analysis makes money or not? You know, and if you go ahead and look at different analyses, all most of them have like different opinion, right? Like somebody will say like long, somebody will say short. So they most of them they don't agree, and that's where the problem comes in because of the manual drawing problem, right? They draw a line constantly, trying to remember swing highs and lows, constantly updating charts, and basically, in my opinion, it's very exhausting and prone to mistakes. Okay, so if I come here and like draw these lines, it's this line is only valid for this chart. Okay, Bitcoin 15 minutes. And if I go to the different chart, this chart will change. Yeah, I mean like then I have to do the analysis again, even though right, like if I come to Ethereum, yeah, it's different chart. So how do we solve that? So one of the problem without reference lines, I mean, there are a couple of problems without reference lines is the we are actually lost on the chart. What traders miss when they don't have reference lines is they don't know where they are and they don't know where to enter. And if you don't know the upper two, now they don't know where to exit and they don't know what the trend is basically, right? And it's not immediately clear what to do next. Right. Now, the transformation moment comes when we apply this um, geometric trading system, okay, structure, and see how the chart comes to life. Okay. See, this is this is how the chart comes to life, guys. You see this, and I'll explain like what these lines mean. But check this out, and I'll actually will talk the trend line later on, so I'll just disable those. Okay, let's just talk about this structure. Okay, now you can see the transformation, the chart comes to life, and watch what happens when we turn on, you know, that we did already. Like, you can see when I disable that, the chart is not making much sense. But when I enable it again, boom, all these reference lines are, you know, mathematically calculated, and we can apply it in any chart like Ethereum. You see, Ethereum, we can apply it in gold. Okay, yeah. So what you get out of it is that you have reference lines automatically plotted. We we are doing no more guessing, no more manual drawing, and everything calculated mathematically. Okay, and the five key levels that we are seeing is the indicator plots these automatically. Okay, so you can see these five levels: one, two, three, four, five. Now you can see here this midpoint is 50%, right? HTF low, HTF high, which is highest high and lowest low of the week. and then 75% level, 25% level. Okay. Now, after having these reference lines, we know where we are. So if right now market is at midpoint, right here the market was at midpoint, and I'll tell you like later on how this is a good trade to take. Okay. Now let's talk about this HTF high. Okay. So this is the highest high on higher time frame, which is we are calculating from the Monday moving forward to the whole week. Okay. So this green line at the top represents the highest high on the higher time frame, and in a downtrend, this acts as resistance, and price has hard time to breaking above it in a downtrend. In an uptrend, it acts as target. So see, as the market was in uptrend, and how do you know if it's uptrend? The midpoint is moving up. You see, plus 2%, plus 2%, plus 3%, plus 3%, right? So as it's moving up, that means it's down, it's in uptrend. It's making a higher high, higher lows, right? See, higher lows and higher high. Now, when it comes to midpoint, if you enter long there, the target is your highest high. Okay, and either this is target or we're trying to break it. And when it breaks through, we get a new high, and the structure updates as you can see. Now let's talk about HTF low. So HTF low is the floor, the lowest low on higher time frame. Okay, and this red line at the bottom represents the lowest low of the week. And in an uptrend, it acts as support. Okay, price bounces out of it, and in a downtrend, it acts as target. So you're trying to reach it or break it below. So for instance, I'll show you what I mean. So see, this was an uptrend. It started as uptrend, right? Making higher midpoints, okay, higher high. And then when it came down, it found support near those near those lows, okay, and from there it bounces off. So in an uptrend, it acts as support, but in a downtrend, if you come here, see as the market was coming down, right? Um, it took resistance from these levels. Okay, you can see here as the market was coming down, starting from the week. When it came here, it acts as support. You see, market came down. Okay, sorry, it acts as resistance, and then if it comes down, okay, I'm talking about the STF high. Sorry. Okay, yeah. So let's talk about the STF low. Yeah, sorry. So in an uptrend, it acts as support, but in a downtrend, it acts as target. So see, if I enter short there, this is my target, right? And if as it's like if it's trying to move up, then like it's gonna act as support in an uptrend, and then we can take profit at the highest high. Okay, so let's talk about the STF midpoint, and that's the most important point here, most critical level. This is a 50% retracement, and this purple line in the middle, okay, this is the 50% level between the high and low, and this is the most important level. Okay, this 50% is this is where the market gravitates toward. Okay, and there's a concept called midpoint magnetism, where price wants to return to its equilibrium. Okay, price stretches up to 75% again, and then pulls back to 50%, then drops to 25%, then rallies back to 50%. So what it's talking about is this. You see, when the price stretches up to 75% here, pulls back to 50%, then comes to 25% here, right? Drops to 25, and then rallies back to 50%. So this equilibrium that you see, that's what we're talking about. It acts like gravity. Okay, as you can see now, on Monday, when the market came to midpoint, it went up. Now it's also came to the midpoint and it's trying to go up. And I think it's gonna go up. So we'll see. Now let's talk about the 75% rubber band effect, which is this 75% level or upper midpoint. So when price reaches the 75% level, it stretches like a rubber band, okay, and it wants to snap back, okay. So see, as it reaches the 75% level, it tries to snap back, okay. It, now it went made new high, but as it like dips down below, it tries to snap back to 50% level, okay. So when price pushes up to 75%, volume increases, okay, and then the reversal band hard back toward no, 50%, which is this what we are seeing. Okay, you see price increases there, and that's what we call rubber band snapping. So, and that's where like most of the reversal happens. So you see when I come here, you see reversal is happening there, right? Here again. Here it tried to go there, but then it snapped back there. So the framework is, think of it as like like this 100% from your HTF low to high, that's full range, okay, and 75%, which is upper midpoint, is your strong retracement zone. 50% is your HTF midpoint, which is equilibrium, which is the most important, and then 25% is your lower HTF midpoint, which is a weak retracement zone, and 0% is your HTF low origin. So you can see this is 25%, right? Weak retracement zone, but strong support zone. Okay, and yeah. So trading strategy would be if you're in uptrend, buy at 20% level or 50% level. So see, as we are in uptrend from this, okay, and I'll actually run through some, yeah. Mm, okay. See, like let's do it from the start of the week, right? And I'll run it like 5x. You can see as we are going up, it's uptrending, and as soon as it comes to the midpoint, it tries to go back up. And I'll actually hang on, I'll add the wave indicator so that we can see it clearly. Okay, so I'll just let the wave appear there. Hmm. You see midpoint, and then boom, it went up. I'll just let it run. And we see again when it came to midpoint, it went up. Now it's again will come to midpoint, and then we will buy there. Okay, so that's your simple trading strategy. In a downtrend, it's going to be 75% sell or 50% sell. Okay, so let me actually show you the example of downtrend there. Okay, I mean, you can consider this as downtrend. You see the purple line is below the previous purple line, right? And you can sell it there. So I want to show you the where both examples satisfy. So see, this is, I'll just go back here and start this week, and let's just let it run forward. Just observe what happens when the market comes to those 75% and 50% level when the midpoint is decreasing. Okay, it's like downtrending. You see, as the midpoint was uptrending from here, it went up there, and then from the 75% level, it came down. So now the purple line is downtrending. So we will watch for 50%, 75% level there market to come there, and then we can take short trade there. Okay. That's a simple trading strategy. So all we have to do is guys to like be patient, like to let the market reach our level. Okay. So it goes about 25. I'll just speed things up a little bit. See, 50%, then came down a little bit. Okay. Came down a lot, like now almost 1%, 1.5%. Then it went up back again. And this 75%, you see, market rejected very strongly. You see this big volume there. And observe what happens when I enable the volume, geometric volume here. See, this big volume came down, which was above second standard deviation. This is a good volume. So if this wave completes there, you can take short, put your stop loss there, and let it run, You see? So this is what I wanted to show you guys. I'll just disable this. So yeah, I'll just let it run and let you observe for a moment, okay? New week started there. See, came down. As it is in downtrend, there we can sell, when it will and is buying. Okay, you see, market did came down a little bit. Ethereum happened, came down a lot, around 25%, right? So see, as it now it's uptrending, right? So now midpoint and 25% level is your buy. Okay, check this out, how it's working now. New year started, new week started, and you see midpoint, boom. Okay, again it's gonna come to midpoint, and it's going up from here. Current market movement. Okay, so let us move on to the next. Now, here's what makes the system so powerful, and that's mathematical precision. Okay, these aren't lines that I drew subjectively. Okay, that I thought, okay, this is making this, and I just draw. No, these are calculated to 8 decimal places. Okay, HTFI is exactly at certain points, which is the high of the market. Okay, HTF low is the lowest low of the market of that week. You see here, and midpoint is exactly the midpoint of HTFI and low. Okay, and everyone using this indicator sees the exact same levels. Okay, and this is what professional traders understand. Markets move in geometric patterns, and you can calculate exact levels where price will react. What they did by hand with rulers, we can now do automatically. So no interpretation, no guessing, it's all mathematical. Okay, and let me show you the settings quickly so you can choose your higher, like, how to use this indicator. But the math is math, guys. The levels are the levels, okay? And it is universally applied to all of the market, okay? And any time frame. Okay, because math doesn't care about what you're trading, right? You can trade it in crypto, Bitcoin, Ethereum, as I showed you this example. You can trade it on gold and oil. Let me put it on gold, and you can see here, right? As it making higher lows, it tries to come to the midpoint, then boom, right? Now it's coming down. So when it comes down to the midpoint, there's another buy point there. So you can see here all these examples. See, as it was coming down, see midpoint making lower highs, lower highs and lower lows, right? And you see when it comes to the midpoint, it goes down, right? And when it comes here, after a couple of dives, it took it as support and then it tries to go up. Okay, so this is what I was talking about. You see, as it was uptrending, it tries to come to the midpoint and then from there it just bounces off. Okay, you see here midpoint, boom. So now you can also apply it in stocks as well. Like I'll just put Apple, you know, and we can see, yeah, see Apple. I can apply it in Apple as well. You see here. So you see when it comes to the midpoint, it tries to go down. Okay, here 75% level tries to go down. Right. In uptrend, 25% level tries to go up but couldn't, so it came down here. Okay. You see 25% level, boom, large move upside. So this way we're going to talk about a lot later on, so don't worry. Okay, so what I'm trying to show you is that these are the same structure, same levels, and same math applied to all market, so we can be more confident in our analysis. So price respects this level. Okay, and when price comes down, hits the lower midpoint at 25% levels, as I showed you, it bounces. When price comes back, hits the upper midpoint at 75% level, it reverses. And when price drops to the midpoint, 50% level, it bounces. You see, again, and that's the beauty of it. Okay, and you must be asking the question, why markets respect these levels? Well, they represent equilibrium zones where buyers and sellers are balanced. That's why they represent these. The market respects these levels. Okay, and the market remembers where it made decisions, and these are the levels that we can see where the market is making decisions. So this is your trading map, guys. Like without structure, you're flying blind. Okay, now let me just show you. Like I'll just put this above, just disable it and select any level there, okay, and just run it, and watch what happens when I suddenly enable this. Okay, so let it run. You're not seeing anything here, okay? Now, as soon as I enable it, boom, you see midpoint, then boom. So you would have you would have taken that trade, right? If you had this structure, this roadmap for your trading. Okay, so now you're not flying blind anymore. Okay, you have a structured plan here. Okay, now with structure, you know where you are and you know where you're going. You see, we know where we're going. Okay, midpoint upside, midpoint upside. Okay, and you know what to do at each level. Midpoint, if it's uptrending, we go long, right? Midpoint, if as it's uptrending, we go long. Okay, so I'll just quickly, just for fun of it, like I'll quickly add position. Let me show you. Okay, yeah, I'll have to select paper trading account here. Okay, so let me just buy one, put stop loss there, take profit there, right, and just let it run. You know, so Why did we took that trade? Because we had this geometric structure trading map, and we are not flying blind anymore. With this structure trading map, we know where we are, where we're going, and we know what to do at each levels. Okay, so yeah, this we talked about, and so the key takeaways from this lecture is the five key levels. You know, HTF low, high, midpoint, upper midpoint, lower midpoint. No mathematical precision, it is calculated to 8 decimal. It's same for everyone, no guessing. Okay, and the midpoint is the most important. I mean, mid, high, low, and midpoint is the most important, and midpoint is the center of gravity where price gravitates towards. Okay, and 75% level is your rubber band. You know, which when the price reaches there, it wants to snap back, and often where reversal happens. And structure is the foundation, guys. Everything else builds on these reference lines. All right. So what's next? In the next lecture, we're gonna talk more about HTF levels, high, low, and midpoints, and exactly how to use the high, low, and midpoint to identify trend, find entries, set targets, and manage risk. Okay. These three levels are all you need. Master them, and you'll never feel lost on chart again. Okay. So I'll see you guys in the next video. Thank you.